Today is April 24th. It's a Sunday. I'm going to be making a trade recap video on the trade I took on Friday, April 23rd. Or today, my bad. Friday, April 22nd. I know I haven't made YouTube videos in a long time now. Um, I'm quickly going to explain where I've been with at trading because I know the couple of people who do follow me are, interested on an update. Long story short, I got pretty caught up with college. A lot of things were going on. I was trying to find a routine. I was adjusting. On top of that, I stopped trading for a period of time just because I was lacking some information with market cycles and pure price action. And what I mean by that is, just levels and zones aside, if I just open a completely blank chart, I was essentially learning probabilities of moves up and down based off of just candles alone. I don't use volume anymore, so honestly, I can remove that or ignore it. And the only reason I don't use volume anymore is just because volume doesn't really add too much to my trading, and it's not a distraction necessarily. It's just that I don't see any benefit in using it. For example, if I'm taking a breakout, I know volume is going to be present. During lunch hours, I know volume is going to be lower. Volume doesn't really add too much in terms of confirmations. So just to clean up some screen space, I stopped using volume. But yeah, besides that, I was just learning price action trading, market cycles, probabilities on moves up and down, measured moves. Um, and I essentially, gained a lot of knowledge in that field. And I went back to options trading, my levels and zones, because, that is my bread and butter. But I am applying market cycles and a lot of new information to it. So I don't regret taking a break. I learned a lot of information in the meantime, and now I'm able to, apply it and see the market slightly differently. That being said, let's get straight into this trade recap video. I'm going to try to make it as quick and concise as possible. I took one trade on April 22nd. That trade was on Google. So the first thing we should do is we'll go to Google. Or actually, the first thing is let's go to ES, SPY, and we can analyze what's going on with SPY on a much higher time frame. So I'm going to look at a daily chart first, just to break it down. But just looking at this information and looking left, what do you see? You see that ES is in a very, very big range. I can kind of draw the tops and the bottoms of these ranges. I'm just going to highlight this entire box right here. Actually, let me do something else. Let me do it as a circle. Okay, so this is the entire range area that ES has been trading in. So let me make sure I'm recording. All right. So what does this mean in terms of what's going on? Some people might just interpret this as a range. ES is trading in a range. We're moving up and down. But all this really means is that there's an 80% chance that buyers will find value at the lows and an 80% chance that sellers will find value at the highs. So that's all a range is. ES has been trading in a range. Buyers or sellers don't want to, push to one side. So we're just going to oscillate between this area up and down. So now let's go a little bit more recently. Now I can get rid of the circle. But you can see that once we hit just this general low area, I can draw a level, I can draw a box, whatever. I'll go ahead and just draw a level for you guys to see. But this was, February's lows right here. Yeah, Feb. So this area right here was February lows. So when we came and we hit February lows against, we had an immediate reaction to the upside. So look at this rally. We had 1, 2, 3, 4 days of a breakout. So this phase right here, I'm going to be talking a lot in market cycles as well, just for more clarity and why that's important now. But you can see that from March 15th all the way to March 18th, we were in a breakout phase. A breakout phase is a very, very aggressive push to either the up or the downside. From that point on, we still moved up, but we channeled, and all that means is instead of going straight up, we pulled back, we moved higher, we pulled back, we moved higher. We kept on forming higher lows. So that's the key thing to keep in mind. We're always going to transition from a breakout to a channel into a trading range. So you can see on March 29th now, when we hit the top of this range again, just in this general area, remember, resistance is just a general area. It's not going to be perfect. It's not going to be aligned. So let me go and highlight the top of that range for you now. So just this general area right here was resistance. It was the top of the range. Sellers are going to find values at the highs because, as I talked about before, we are in a trading range. So that being said, from this point, for the next couple of days, we were stuck in a trading range, and then look what happened. We broke out again, and the breakout wasn't as aggressive to this, but keep in mind that we had 3 red candles down, and then we channeled down. And I'm going to be explaining more of these, channels and these pushes, in future videos. I don't want videos to go on for too long, or if you really, really want me to, I can go ahead and, make just separate videos on market cycles and wedges and all that. But essentially what happened is, we moved down, so I can highlight it for you. We had a breakout in a channel. We transitioned into a trading range from March 11th all the way to March 20th. And we formed the wedge top. I'm going to go to a 1 hour chart just so you can see it better. But we again, on a 1 hour chart, we broke out. We had 3 pushes up, 1 pullback, 2 pullback, 3, and then we immediately reversed. So again, this might not be making a lot of sense to you. I'm only explaining this to you right now just so you know, you can understand why exactly I took Google and what my predictions for the market were on April 22nd. But keep in mind that once we had this wedge top, once we completed this phase of the trading range, we had another breakout. So that's currently what's going on right now. We've had 2 days of breaking out. So what this means is, there's a very, very good chance now that we're going to continue to head lower. We'll probably channel down. I'm expecting to February's lows, and then, we may either enter a trading range, we may break down, break out. I personally have no idea. All I know right now is that we are in a breakout phase. So there is a very, very high probability that we're going to move lower, even if it is with pullbacks. So yeah, that's kind of like the context of what's been going on with SPY. I think it's very, very important to understand what cycle we're in and analyze, what cycle we're in, so you kind of know, what other equities are going to do. Because if ES is heading lower, if NQ is heading lower, then there's a good chance that the equities will follow as well. That being said, now let's go to Google and let's go to a higher time frame, and I'll explain what I saw on Google exactly and why I took the trade. So, it's no doubt that a lot of these equities are in ranges, so I'm not too interested in playing a lot of these equities. That's why I'm trading SPY and Qs more often. But when I do see a good level breakout, I am definitely going to take it. If you watch my past videos, you know exactly how I do it. I find major areas of support and resistance. This is a critical level, the 2500 area. And, it had several touches on the daily time frame. A touch right here, a second touch right here. And even the day before we broke out, on April 22nd, on April 21st, we also hit this low right here. So that was just a higher time frame analysis. Also keep in mind that we were making lower highs. We had a high right here. This high was lower than that one. This high was lower than that one, and finally on April 21st, that high was lower than this one. And besides that, the last point I wanted to cover was look at these pullbacks by buyers. Look how aggressive these pullbacks were, but maybe you'll see it better on a 1 hour time frame. And whenever I trade equities, again, if you watch my previous videos, you know that I do not keep extended hours on for equities because there's limited action going on, limited price action trading. But look how weak these pullbacks are. This pullback couldn't even get us below above this high. This pullback right here couldn't even get us above this high. And finally, this pullback here wasn't even close to breaking any of these highs. So that automatically lets us know that sellers are in control of Google, at least for the shorter term time frame. And then finally, all that happened was I identified the level, I identified what cycle we were in, and I just waited for price to breach the level, and I took a trade right here. I ended up selling relatively early. The only reason why is because I entered with around $1,900 and I came out 10 minutes later with 3,200. So that was a $1,200 profit. And it was Friday, and I was only playing one contract, so that's why I ended up selling early. But again, if you watch my previous videos, you know how I do scale outs. I'll sell some on the first push down. If it is an aggressive move down and I'm expecting a second leg, then I'm going to hold some of my contracts, expecting that we're going to continue to move lower. So that was the entire trade on Google. If you want to quickly look at what SPY and Qs were doing, I already identified the context that we would head lower, but look at what SPY and Qs did. We moved lower, we formed supply on the way. So everything aligned up, and Friday was a relatively easier day to trade in my opinion because a lot of things made sense to me. But that's in terms of it from the technical perspective. Again, I'm sorry that I haven't been making videos as recent. Again, I am really looking to get back into it now, especially that I have more free time. Uh, so yeah, that was the entire trade recap. A couple of psychological tips to really look at the bigger picture, really identify what's going on. I promise you, if you just look at zones, if you just look at levels, if you just follow one set strategies, not one set strategy, if you only look at limited parts, it's very, very hard to make a living. It's very hard to be profitable because you really, really need to look at the bigger picture and see what both buyers and sellers are doing on a higher time frame. And once you can identify that, then trading on a smaller time frame becomes a little bit easier. But I am going to end the video here. Again, if you have any questions, just leave a comment in YouTube below. You can hit me up on Discord. That's probably where I'm the most active. And I also have an Instagram account now where I'm documenting like almost where I document every single trade I take, the reasoning behind it. So again, if you don't have time to watch a lot of these videos, you can follow me on Insta as well, where I post detailed trade breakdowns there. So yeah, I hope you guys have a good rest of your Sunday, and I will be back to trade tomorrow.